Chalo, let's go ahead and start our class now. People, today we are going to start our chapter of input tax credit. Let me go ahead and give you a quick linking. Today is day 5. We are going to start with our discussion on input tax credit. Everyone, listen to me very carefully. We started learning GST with goods or service. Goods or service has to be supplied. Now, supply can be either interstate supply or it can be intrastate supply. Interstate supply IGST will be charged. Intrastate supply CGST will be levied. Yes sir, IGST and CGST will be levied. Sir, whenever GST was levied, it has to be collected and paid by a taxable person. How will you collect and pay? Sir, you will have to calculate GST is equal to value of supply into rate of tax. Everyone over here now. Once you know the value, you will prepare the tax invoice, credit note, debit note and delivery challan. Then you have to go ahead and maintain your accounts and records, and you will send the goods to the other person with the help of a e-way bill. Now once you go ahead and maintain your accounts and record, your liability to pay will come, and liability comes at the time of supply. Yes sir, we all have gone ahead and studied till here. Now listen to me very carefully. Once your liability comes, for an example, you are liable to pay 1000 rupees to the government. Now, how will you go ahead and pay? Sir, first you have to go ahead and use some ITC if you have it. So the next chapter comes is, sir, I will go ahead and use my input tax credit. 500 rupees, supposingly you have your input tax credit. Then remaining amount, you will go ahead and make the payment of taxes. 500 rupees ka remaining amount ka payment you will do, and then you will go ahead and file your return. So today we are going to learn the chapter of input tax credit. Everyone over here, can we go ahead and do a section revision till now? Yes sir, section revision we can do it. Goods and service, goods section number 252, services section number 2102. Sir, goods and service has to be supplied. Supply section number 7 of the CGST Act. Supply section number 8 of the CGST Act. Yes sir. Interstate supply section number 7 of the IGST Act. Intrastate supply section number 8 of the IGST Act. Section number 9 told about territorial waters of India. Section number 10, 11, 12, 13 talks about. Can you tell me what does it talk about, everyone? Sir, this talks about place of supply. Yes, sir, we all remember. Then we have section number 14, which talks about OIDR. 15 talks about tourist. 16 talks about zero rated supply. IGST का levy section is section number 5. CGST का levy section is section number 9. When GST was levied, some people went ahead and asked for composition levy, and composition levy का section number was section number 10. Okay, sir. In between this, I had told you that there is a chapter called exemption. Yes, sir, you are told it. Exemption में section number 11 of the chapter, section number 11 gives the government the power to go ahead and grant exemption, and section number 6 of the IGST Act goes ahead and gives the government the power for granting exemption. Now, sir, it has to be collected and paid by a taxable person. You told section number 22 people who are liable, 23 people who are not liable, 24 told about compulsory registration, 25 told about procedures, 26 deemed registration, 27 CTP and NRTP, 28 told about amendment, 29 told about cancellation, 30 told about revocation of cancellation. Here there was rule number 23, there was amendment. Yes sir, we remember. Now, the value of supply chapter, value of supply chapter, value of supply is given in section number 58, section number 15.1, transaction value. 15.2, topics are to be included. 15.3 told about discount. Section number 15.4 told about the various valuation rule. Section number 15.5 goes ahead and says government can go ahead and notify the valuation method. Okay, sir. Now here we went ahead and also went ahead and learned about the various valuation rule, like rule number 32, rule number 33, rule number 34, and rule number 35. Yes, sir, we remember. Rate of tax they will give you in the paper, so you don't have to remember the rate of tax. Next. Sir, once you know the value, you will prepare the tax invoice. Tax invoice ka chapter is section number 31. Section number 32 told if you are unregistered, you should not go ahead and collect tax. Registered person should collect as per the act or rules. 33 went ahead and told that tax amount should be shown separately. Section number 34 told about credit note and debit note, and rule number 55 told about the delivery challan. Next, accounts and records comes section number 35. Section number 35 means section number 35 5 there is an amendment. I hope you guys remember section number 35 5 has been deleted. Audit by chartered accountant or cost accountant, the audit which was there, now the provisions have been deleted. Now there is no more audit requirement from the chartered accountant or cost accountant. Yes sir. And section number 36 went ahead and told about the period of retention of accounts. I hope you guys have gone ahead and revised it. Yes sir. Then we have E-way bill. E-way bill is section number 68. Red ware, rule number 138 to 138A, 138B, C, D up to E. E may there is an amendment, rule number 138E. Yes sir, we guys remember that rule number 138E which was there. Here there is an amendment. Please take care. Yes, sir. We are doing the revision. If you are not revising it, bad manners. Please revise. Then liability to pay. Liability to pay section number 12, section number 13, and section number 14. Today we are going to continue with our discussion on the chapter of input tax credit. Let's go ahead and get it started. Input tax credit section number 16. Section number 16 went ahead and told eligibility and who is eligible and what are the conditions subject to which he is eligible. Then we have section number 17 which goes ahead and talks about apportionment of credit plus block credit. Then we have section number 18 which talks about special circumstances when credit shall be allowed. So let's go ahead and get it started now. ITC ka chapter, A graded chapter, 100% up to 10 marks they go ahead and ask for from the chapter, sometime 10, sometime 12 marks. So very important from exam point of view. Chalo, let's go ahead and start with input tax credit. First of all, what do you mean by input? Always remember one thing. Input, if you see the definition of input means, sir, goods except capital goods used or intended for use in the business, means other than capital goods, whatever you buy, goods for using in your business, that is known as inputs. Okay sir, what do you mean by input services? Any services which you go ahead and buy for using in your business or intention is to use in your business, then sir, it is known as any services which you take for using in your business is known as input services. Capital goods are those goods which you have gone ahead and capitalized in your books of account, and sir, the intention is to use in your business. They are all known as input services and capital goods. But you know what, literally by reading the name of the chapter, inputs pay, whatever tax you pay you get the credit, but input over here means all the three: input services or capital goods. All the three ka whatever tax you pay. Sir, what do you mean by tax? If I pay excise duty? No baba, when they are telling about tax, they mean that GST which is paid, either paid under forward charge or you are paid under reverse charge, both ka credit you can take, whether it is CGST, SGST, IGST, UTGST, and includes IGST paid on import. Whenever you import goods into India, you pay IGST on on importing at the custom port when you are filing the bill of entry, but does not include composition tax. Always remember, if I am a composition dealer, I will pay 1%, 1% or 5%, but the front party which is there, they will not get the credit, because anyways I am going in and issuing them a bill of supply, and on the basis of bill of supply you can't take the credit. Yes sir, point is clear. So input pay, whatever tax you pay, you will go ahead and get the credit. Over here, when I talk about input, it means normal inputs also, it means input services also, and capital goods. All pay, whatever GST is being paid, you will get the credit. Sir, where will I get the credit? Baba, you will get the credit in your e-credit ledger. E-credit ledger. Done, sir. Then we have section number 16 which comes into picture. Section number 16, the name itself is eligibility and condition for taking input tax credit. Everyone listen to me carefully. Number one, sir, who are the people who are eligible? If you are a registered person, you are eligible. Secondly, of what you are eligible? You are eligible of taking the credit of the goods or service or both which you have used in his business. used in his business, means not my neighbor's business, used in his business, and amount shall be credited where? In your e-credit ledger. Number one, everyone with me. Number one, who is eligible? Registered person is eligible. Number two, sir, section number 16(2) goes ahead and says what are the conditions subject to which a person shall be eligible. Sir, condition are, I hope you guys remember, sir, TR condition. T for, sir, tax invoice or other tax paying document should be there. R for received, you should have received the goods, only then you can take the credit. T for tax paid to the government, and R for return has to be filed. You have to go ahead and claim your credit, only then you will get it. Sir, what is it? Number one, tax invoice should be there or tax paying document should be there with you. You should have received the goods. Number three, tax which you have paid to the supplier, he should have paid to the government, only then you will get the credit. Number four, you should have gone ahead and filed your return, only then you will get your credit. Done, sir. Point is clear. So let's go ahead. TR condition. Number one, T for tax paying document should be there with you. Means if you want to claim the credit, you should have the document which goes ahead and says that you have gone ahead and paid the tax. That document has to be there with you. Sir, what are the various documents which are there? Possession of tax paying document, tax invoice or revised tax invoice. You should have the tax invoice or the revised tax invoice, or debit note should be there with you, or such other tax paying document as prescribed in rule number 36. Rule number 36 goes ahead and talks about the various documents which we will go ahead and understand now. You should have supplier's invoice. You should have self invoice in case unregistered person has supplied to you and you are required to pay the GST under RCM. You should have the debit note with yourself. You should have the bill of entry in case of import. You should have the ISD invoice. Only then you can go ahead and take the credit. Okay, sir. Point is clear. Remember, you should have, what are the document which is there? Bill of entry. You should have the ISD invoice. Reverse charge का case में self invoice you should have. Sir, debit note you should have, and suppliers invoice you should have. Only then you can go ahead and get the credit. Sir, what are the document we should have? Documents you should have is birds. Birds. You can remember. B for bill of entry. I for ISD invoice. R for reverse charge mechanism का केस में self invoice you should go ahead and have. Okay, sir. Debit note, Baba, don't give it the name as self invoice. You have to go ahead and give it the name as, sir, invoice under section. Means you have to go ahead and raise an invoice under section number 31(3)(f) if I am not wrong. Yes, sir. Then D for debit note. Then, sir, S for supplier's invoice. All these documents, if you have, you can go ahead and take the credit. Okay, sir. The next one over here is what are the things that should be there in your document? Means all these documents which you have, at least in your invoice, what are the details you should have for you to go ahead and take the credit? It is being told over here: description, value, tax, GSTN number of both, and place of supply. Remember always description, value, tax, GSTN number of both, and place of supply in case of interstate should be there. Only then you can go ahead and take the credit. No input tax credit of any tax paid in pursuance of demand order confirmed on account of fraud, willful misstatement, or suppression of fact. Supposingly you were caught and you had to go ahead and pay some, taxes. You have gone ahead and paid the tax, and now you want to go ahead and pass it on to your recipient. He will not be able to take any input tax credit. If you have paid any tax in pursuance of a demand order which is confirmed on occasion of what? Fraud, willful misstatement, or suppression of fact, then you will not be able to pass on the credit to your front party. Gone, Baba, that credit is gone. Next, sir, ITC availment. How much credit can I go ahead and take? For an example, I have gone ahead and bought goods from my supplier. Supplier will file their GSTR 1. It will go ahead and appear in my GSTR 2A, and then subsequently it will be posted to my GSTR 2B also. Now, whatever is appearing in your GSTR 2A, you can go ahead and take how much credit, sir? You can go ahead and take 105% credit. Means 100% of the invoices which are furnished, and maximum 5% of the invoices furnished with respect to invoices which are not furnished. For an example, GSTR1, your supplier had gone ahead and shown only 60 invoices, 6 lakh ka credit, it is appearing in your GSTR2A. Then Baba 6 lakh is over here. Now 40 invoices your supplier did not go ahead and show where the credit was 4 lakh rupees and hence it was not appearing in your GSTR 2A. Sir, how much credit can I go ahead and take with respect to this 4 lakh rupees? They are going ahead and telling 6 lakh rupees ka 5% which is 30,000 and hence you can take 6.3 lakh. Just be careful in your exam. 5% for of the furnished invoice with respect to the invoices not furnished. Done, sir. Point is clear. Secondly, you should have gone ahead and received the goods, services, or both. Only then you can go ahead and take the credit. Sir, for an example, I went ahead and told my supplier, you give me the invoice, but supply it to the other person. Bill to ship to model may. If the third party, if the ultimate recipient receives it, when I receive the invoice, I can take the credit. For an example, I told the supplier, you give me the invoice, but send the goods to my job worker. When the job worker receives, I can take the credit because it will be deemed that when job worker receives it, I have gone ahead and received it. It says, sir, deemed received when goods services are provided by supplier to the recipient on the direction of such person. Always remember, whenever the ultimate recipient receives it, it will be deemed that I have received it and I can take the credit. Sir, tax has to be paid to the government. I have gone ahead and paid the tax to the supplier. Supplier should go ahead and pay the tax to the government either by using his cash or by going ahead and paying through his credit. Only then I will be able to take the credit. Provisionally the credit is given, but later on they will check whether the supplier has paid to the government or not. If the supplier does not pay, whatever tax you have taken, they will take it back from you. So provisionally they go ahead and give the credit. Next, return should be filed by the recipient under section number 39. When you are going ahead and taking the credit, the return should be filed by you. Everyone listen to me very carefully. Section number 16 went ahead and told section number 16.1 eligible person is a registered person of the goods services on both which he has gone ahead and used for his business. Section number 16.2 goes ahead and shows tells what is the condition subject to which you will be eligible. TR condition. Sir, you should have the tax paying document which is birds. ठीक है sir. R for you should have gone ahead and received the goods, only then you can take the credit. T for tax should be paid by the supplier to the government, and R for return should be filed by you, only then you can go ahead and take the credit. Done, sir. Point is clear. Next, there are some provisos which are there if goods are received in lot. For an example, I've gone ahead and ordered some goods to a person. He's sending me in lots. In January, he has sent some lot. February, he has sent some lot. March, he has sent some lot. I can go ahead and take the credit on the receipt of the last lot. Second one over here is payment to the supplier. I've gone ahead and received an invoice on 1st January. I should make the payment to my supplier within 180 days. Always remember, if I don't go ahead and make the payment to the supplier within 180 days, once 180 days gets over, whatever ITC I had gone ahead and taken on this invoice, for an example, January I received an invoice, February 20 I went ahead and took the ITC. When I take the ITC, always remember from the date of invoice, I should make the payment to the supplier within 180 days. Otherwise, whatever ITC I had taken, I have to go ahead, once 180 days get over, I have to go ahead and report the same, reverse the credit which I had taken along with interest. Done, sir. Payment to the supplier within 180 days from invoice you should go ahead and make. If you don't go ahead and make, whatever the credit you had availed, you have to go ahead and reverse it. Once 180 days gets over, you have to go ahead and report that amount and you have to reverse the credit along with interest which is 18%. Yes sir, point is clear. If not, if you don't make the payment, then pay the ITC availed along with interest at the rate of 18% from the day you had gone ahead and taken the credit till the date the amount is added to your output tax liability and paid. Done, sir. Point is clear. Rule number 37 is applicable. No reversal with respect to what? Sir, this reverse which I have to do after 180 days, it is not applicable with respect to what? They have gone ahead and told supplies under RCM, supplies without consideration, and on that part of the value of supply which is made by the recipient, on that this reversal will not attract. Please be careful about this 3 point. Sir, supposingly within 180 days I did not make the payment. You told please reverse the credit. I reverse the credit. Later I made the payment after 1 year to the supplier. When I make the payment, can I take the credit back? Yes, Baba, you can go ahead and take the credit back. If you make the payment after 10 years also, no problem at all. ITC can be taken again. So once I received the invoice, I took the credit. 180 days got over from the invoice, I reverse the credit. Later, I make the payment to the supplier. Can I take the credit again? Yes, Baba, you can go ahead and take the credit again. Section number 16.3 goes ahead and tells if you take depreciation. So for an example, I went ahead and bought a machine for 10,000, 2,000 rupees I paid GST. This 2,000 rupees which is there, either I can go ahead and take the ITC of this, or along with the machine 10,000 rupees, 2,000 also I can go ahead and capitalize, and on 2,000 also I can go ahead and claim depreciation. They are going ahead and telling Ramesh, listen one thing, if you are going ahead and taking ITC, don't take depreciation. If you are going ahead and claiming depreciation on the tax component, don't take the input tax credit. Yes, sir, we got it. Whatever, always remember one thing, whatever registered person, if he claims depreciation on the tax component of capital goods and plant and machinery under the Income Tax Act, no ITC. If you take ITC, don't take depreciation. If you take depreciation, don't take input tax credit of the tax component. Section number 16.4 goes ahead and says, if you have an invoice or you have a debit note, what is the maximum time limit till when you can go ahead and take the credit? They have told maximum time limit to claim the input tax credit with respect to an invoice or a debit note is the due date of monthly return of September of the next financial year. So for this year, if you have an invoice, you can go ahead and take the credit. Or in this year, if you have gone ahead and received any debit note, you can go ahead and claim the credit by what date, sir? By 20th of September, by September month ka monthly return or actual date of annual return, by due date of monthly return of September, which is basically 20th October, or actual date of filing annual return, whichever is earlier. Always remember one thing, the year you have received the invoice and the year which you have received the debit note. For an example, I received an invoice this year. With respect to this invoice, debit note was received in the next year. So Baba, debit note ke liye the time limit shall be next financial year 20th of October or actual date of annual return. Earlier, invoice and debit note was linked, but now they have gone ahead and told the year you received the invoice, next year ka 20th October or actual date of annual return, the year you receive the debit note of that year, next year ka 20th October or actual date of annual return, till that time you can go ahead and take the credit. Yes, sir. Quickly give me a heads up, everyone. Are we all clear till here? Quick, everyone. Are we all clear till here? Can we all go ahead? Yes, sir, we are all clear till here. Chalo, let's go ahead. Everyone, listen to me very carefully. I am going ahead and teaching you section number 16. Section number 16, 1 goes ahead and says eligibility. Registered person is eligible of the goods, services, or both which he is going ahead and receiving for his business. Section number 16, 2 went ahead and told TR condition to be fulfilled. Section number 16, 2 may they went ahead and inserted proviso. If you receive the goods in lot, on ITC on the receipt of the last lot, then they went ahead and told you should make the payment to your supplier within 180 days. Section number 16.3 went ahead and told if you take ITC, don't take depreciation. If you take depreciation on the tax component, don't take ITC. Section number 16.4 went ahead and told maximum time limit to go ahead and take the credit is with respect to invoice and debit note. It is always 20th of October, which is September month ka monthly return of the next financial year or actual date of annual return, whichever is earlier. Yes, sir. Point is clear. Now, there is a circular with respect to there is a circular which is given with respect to the amount of credit which you can go ahead and take. It says restriction in availment of ITC under Rule 36 sub Rule 4. 36 sub Rule 4 related some talks they have gone ahead and done. Let's listen. Restriction applicable only with respect to invoices or debit note to be declared by the supplier in 37(1) means under GSTR 1 and not uploaded. Full ITC can be availed with respect to IGST paid on import. Sir, I've gone ahead and paid IGST on import on the basis of bill of entry. Can I take the whole credit, or should I wait for the supplier to go ahead and upload in GSTR1? Baba, you have gone ahead and imported. Supplier will never go ahead and file their GSTR1, and hence IGST paid on import, you can take the full credit. There is no restriction applicable. Sir, self invoice. Sir, I have only generated the invoice. Supplier is unregistered. He will never go ahead and file GSTR1. Can I take the full credit? Yes, Baba. ISD credit. ISD credit ka case mein ISD never goes ahead and files GSTR1. And hence, sir, can I go ahead and take the credit on the basis of ISD invoice? Yes, Baba, you can go ahead and take the credit on the basis of ISD invoice. Restriction is applicable only when the supplier is going to file GSTR1 and it is going to appear in your GSTR2A. When the supplier is never going to file GSTR1, in that scenario, they have gone ahead and told, don't worry about it. All these invoices which are there, you can take the full credit. Sir, restriction is calculated on overall basis and not supplier wise. What do you mean by this? Supposingly, one supplier, he has not filed some invoices. One supplier, he has gone ahead and filed complete invoices. Baba, you have to see all the suppliers put together, whatever credit is appearing for you. Of that total, you have to take 5%. You don't have to see every supplier. Oh, this supplier plus 5%. This supplier, oh, he has filed all the invoices. I will not get anything additional. No, total you see whatever credit is appearing in your GSTR2A, which is further reflected in your GSTR2B. Sir, whatever credit is appearing, of that you have to go ahead and take 5% additional. That's all. Total ka 5%. Credit denied as per section number 36(4) can be claimed later when the invoices are uploaded. Sir, this month I did not get the whole credit. I got only for the invoices which are not uploaded. I got only invoices uploaded ka amount ka 5%. Sir, what about the remaining credit which I have not got? The remaining credit which you have not got, once your supplier goes ahead and files his GSTR1, you will be able to take the credit. Okay, sir, point is clear. Now, listen to me very carefully. Section number input tax credit chapter, you have section number 16. We are done with section number 16. I believe it's an important section. You should be very careful about it. Then we have section number 17. Section number 17 goes ahead and says, everyone over here, section number 17 goes ahead and says apportionment of credit and block credit. Apportionment of credit, let's go ahead and first learn. Apportionment of credit, it goes ahead and says, if you go ahead and use something completely for your business, then to Baba section number 16 told you can take the credit. The question which was asked was, sir, goods, services or both used by registered person partly, if it is used for business purpose and non-business purpose, can they go ahead and take the credit? Then it was told that, sir, if you are using something, I went ahead and bought something, I am going to use. For an example, this is the invoice relating to something which I bought for business purpose and non-business purpose. What they are going ahead and telling, credit available of input tax attributable only for business purpose, means how much of this credit is attributable for business purpose, only that much you can take. The credit which is not for business purpose, you can't take it. Okay, sir, this is a waste paper which is there, both sided is written, and it's a waste paper. That is why I'm going ahead and using it for tiering purpose. Done, sir. Because after class also, sometimes student go ahead and say, sir, you are wasting paper. So I'm going ahead and clarifying, it's a waste paper which is there. Okay, sir, done. Chalo, let's go ahead. Everyone over here. Section number 17 2 goes ahead and says, if you are going ahead and buying something. So for an example, I went ahead and bought something which I am going to use to affect taxable supply as well as exempt supply. Taxable supply related credit I'll get, exempt supply related credit I'll not get, but it is a common credit which is there. So they have gone ahead and told to do apportionment, and they have told taxable credit, taxable supply related credit you take, exempt supply related credit you don't take. But sir, it is not so easy as tiering invoices, and hence they have gone ahead and told, sir, how much credit to take? Everyone, credit available of input tax attributable to taxable supply including zero rated supply. Always remember, for zero rated supply also you will go ahead and get the credit, even though zero rated supplies were exempt supply, but because you export you will get the credit. And hence they have gone ahead and told, sir, whenever you have to take the credit, always remember section number 17(6) says, Ramesh, don't tier the invoices, just learn, just do the apportionment, how much credit you can take, how much credit you can't take. That government has gone ahead and told, method of apportionment to be prescribed by the government. Sir, refer rule number 42. Rule number 42 goes ahead and says about manner of apportionment with respect to input and input services. Input and input services. For capital goods, how to go ahead and do the apportionment, that is told by rule number 43. Done, sir. Point is clear. Now listen to me very carefully. When you are going ahead and doing the apportionment, for an example, 1 lakh rupees ka credit you have, you generally go ahead and you will see how much is your exempt supply divided by total turnover. Yes, sir. To go ahead and do the apportionment, what will I try to do? I will go ahead and take the exempt supply divided by total turnover. So what government went ahead and told, if the exempt supplies are more, it means exempt supplies are more. Then listen to me very carefully. 1 lakh rupees I have the credit. Exempt supply, if it is more, means less amount of credit I will get, more amount of credit I will have to reverse. Exempt supply related credit I will not get. So, sir, government wants to make exempt supply more so that you get less credit, and hence government went ahead and told value of exempt supply for the purpose of apportionment you have to take as per section number 17.3. Section number 17.3 went ahead and told generally exempt supply means nil rated supply, wholly exempt supply, non-taxable supply. Yes, sir. Please go ahead and take all the three values. Value as transaction value, transaction value, transaction value of nil rated, wholly exempt, non-taxable supply. But further, they went ahead and extended the definition of exempt supply, and they told addition which is done by section number 17.3. They went ahead and told Ramesh, if you are going ahead and doing a supply on which is tax is paid, on which tax is paid by the recipient under reverse charge mechanism. So now if the tax is paid by the recipient under reverse charge mechanism, you have not charged any tax, and hence government is telling I will assume it to be exempt supply only for the purpose of apportionment, and you will not get the ITC with respect to those supply. So whenever I am doing a supply under reverse charge mechanism, for that supply I will not get the credit. So government told if you have done a supply under reverse charge, the transaction value will be taken as the value of exempt supply. Then transaction in securities 1% of the sale value. Transaction in securities, Ramesh, you are going ahead and using the office laptop. You are sitting in the office and going ahead and doing transaction in securities. Transaction in securities, but there is no GST. So only for the purpose of credit apportionment, we will take transaction in securities ka 1% of the sale value as the value of exempt supply. Just government is trying to increase the value of exempt supply. The more is the exempt supply, the more will be your reversal, the less amount of credit you will get. Next, sir, sale of land and completed building. So if I have gone ahead and sold land and completed building, on that there was no GST, and hence government is going ahead and telling only for the purpose of apportionment we will take the stamp duty value as the value of exempt supply. Always remember, don't consider other schedule 3 activities which are out of scope. Don't consider all schedule 3 activities. Only one, supply of land and completed building, has been told over here that, sir, for that we will not go ahead and give you the credit, and hence always remember, whenever I say section number 17 may section number 17 one told business purpose and non-business purpose, if you are using something you will get the credit with respect to business purpose. If you are using something for taxable supply and exempt supply, you will get the credit with respect to taxable supply, means exempt supply related credit you will not get, and hence they went ahead and defined exempt supply in section number 17.3. Exempt supply means nil rated supply, wholly exempt supply, non-taxable supply. Take the transaction value, transaction value, transaction value. Okay. Then, sir, supplies under RCM, take the transaction value. Securities, may if you are dealing sale value ka 1% of the sale value. Land and building, if you are going ahead and selling 1%. No, 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 no. Stamp duty value has to be taken as the value of exempt supply. Take the total, that will be the value of exempt supply. Yes, sir, point is clear. Listen to me very carefully now. Exempt supply, interest and discount income, except in case of banking. Sir, what are they telling? Exempt supply, say you have to go ahead and exclude, means you don't have to go ahead. You don't have to go ahead and take interest and discount as exempt supply, although it is exempt supply. Although interest and discount is exempt supply, but for the purpose of this calculation, you will not go ahead and take interest and discount as exempt supply. Done, sir. Next, value of supply of service by way of transportation of goods by a vessel from custom station in India to outside India, although it is exempt, but only for the purpose of calculation. You will not go ahead and consider this as exempt supply. So for an example, I am an Indian shipping company. I am taking the goods from India outside India. Yes, sir. taking of goods from Indian custom station to outside India is an exempt supply, and hence it has to be taken as exempt supply, but they have gone ahead and told for for the purpose of apportionment, don't go ahead and consider it as exempt supply. Done, sir. Point is clear. Everyone listen to me very carefully. Section number 17, I went ahead and told if you are going ahead and section number 17, I went ahead and started. I went ahead and told section number 17.1, if you are using something for business purpose, non-business purpose, credit with respect to business purpose only you can take. Sir, if you are using something for taxable supply, including zero rate supply and exempt supply, you can take the credit with respect to taxable supply. Now, how much the credit to take, how much credit not to take, section number 17.6 has gone ahead and told. Went ahead and told, we will go ahead and tell you the valuation method, which is rule number 42 and 43, which we'll be learning after some time. Section number 17.3 told how much will be the value of exempt supply. We will go ahead and tell you. Exempt supply means nil rated. Everyone with me. Nil rated supply, wholly exempt supply, non-taxable supply. It will also go ahead and include those supplies which are under RCM. Sir, 1% of the sale value of securities and stamp duty value in case of sale of land and completed building. Done, sir. Point is clear. Section number 17.4 goes ahead and says if you are a banking company, everyone listen to me very carefully. Banking company, financial institution, NBFC, who is basically going ahead and giving loans, etc. They went ahead and told the government, everyone, they went ahead and told the government, sir, our main purpose is to go ahead and give what? Is to go ahead and earn interest. So interest is an exempt supply. Sir, if you go ahead and say our main purpose is to go ahead and earn interest income. Yes, giving loans and taking interest. Now, sir, for us, the maximum supply will become exempt supply, and hence, sir, will not get the credit. So, government went ahead and told banking companies do one thing. 50% credit you take it, 50% credit you forget. Huh? Banking companies को government went ahead and told section number 17.4 में see either banking companies you do one thing, banking company, financial institution and NBFC who is basically engaged in supply of loans, extending loans, etc. They were given two options. Either you go for apportionment or do one thing. You will be given one option number two. What is option number two? Banking company, you do one thing. Whatever inputs you buy in a month, input pay 50% credit, you take it. Whatever credit is there, take 50%. Input services pay, whatever credit is there, take 50% only. Capital goods, whatever credit is there, take 50%. If you are buying something for non-business purpose, don't take the ITC. Okay, sir. If you are buying something on which credit is blocked under section number 75, don't take the credit. If you are going ahead and taking some services from your distinct person, take the ITC 100%. That's all you have to go ahead and remember. Everyone over here, that's all you have to go ahead and remember. See, that is another option which is given to banking company. Eligible ITC, input service capital goods 50%, take 50%, take 50%, take 50%, remaining 50%, forget it. Okay. Inputs received from distinct person, take full ITC. Whenever you receive some input from your input services from your distinct person, take full ITC. Then, sir, all this you should go ahead and furnish in your GSTR2. GSTR2 is now not going, so basically they will go ahead and claim in their GSTR 3B. Done, and the amount will be credited in their E credit ledger. Not to avail following credit: tax paid on input used for non-business purpose and block credit. Whatever is the block credit, non-business purpose, don't take the ITC. Block credit, don't take the ITC. Then proviso, option 1 exercise cannot be withdrawn during the year, and 50% restriction is not applicable in case of supplies from distinct person, because from distinct person when you take the supply you can go ahead and claim 100%. I went ahead and taught you section number 17. Section number 17, I taught you section number 17.1, 17.2, 17.3, 17.4 and 17.5 is also there. Listen to me very carefully, everyone. I went ahead and told you section number 17. Section number 17.1 says if you are using something for business purpose and non-business purpose, you can go ahead and take the credit with respect to, what, everyone? Quickly tell me. You can go ahead and take the credit with respect to those, how much is applicable for your business purpose. Taxable supplies including zero rated supply and exempt supply, then you can take the credit with respect to taxable supply including zero rated supply. How much to take, how much not to take, government will go ahead and tell in section number 76. Government told, we will tell. Okay, and government told we will introduce rule number 42 and 43 where government have gone ahead and told how much credit to take and how much credit not to take. Then we have section number 73. If you are going ahead and supplying something, No, section number 17.3, which goes ahead and says what should be the value of exempt supply. Exempt supply ka value, sir, should be nil rated supply, wholly exempt supply, non taxable supply. Take the transaction value, transaction TV, transaction value. Plus, you have to go ahead and take RCM का केस में ट्रांजेक्शन वैल्यू ओके सर 1% of sale value in case of securities transaction yes sir and stamp duty value when you have gone ahead and sold land and completed building done sir point is clear section number 17 4 went ahead and told if you are a banking company का केस में always remember inputs take 50%, input services take 50%, sir capital goods take 50%, sir distinct persons से services take 100%, non business purpose don't take ITC. Sir, block credit, section number 17.5. Don't take ITC. Yes, sir. Point is clear. Always remember, section number 17.5 goes ahead and talks about what, sir? Section number 17.5 goes ahead and talks about blocked credit. How much credit? What are the things? Even if you are using for your business, you will not get the credit that is told by section number 17.5. Are we all clear till here? Quickly give me a heads up. We are done with section number 16 and section number 17 over here. Quickly give me a heads up, everyone. Yes, sir. We are all clear till here.